Hi everybody and welcome to this podcast on Treasury-related issue. My name is François Escalier. I'm the chairman of the ATEL, deputy chairman of the European Association of Corporate Treasurers.
Hello ladies and gentlemen, my name is Philippe and I'm based in Luxembourg. I'm as well a member of PwC Global Treasury Solution Practice and IFRS team.
Today's video is about one of the forthcoming accounting changes. So Philippe, the new IFRS 9 standard has been finalized and once endorsed by EFRAG by the end of 2016, we can expect that the EU will fully adopt it. Could we say that the new accounting standard is good news for corporate treasurers?
Well, François, yes. This new IFRS 9 hedge accounting general model is good news for treasurer. I for sure cannot talk about every changes that are coming, but I think that a better alignment between accounting and risk management, a broader range of eligible hedging instruments and enhanced accounting treatment of time value of options, forward points and currency basis spreads, for example, are positive signs.
Yes, indeed. But what are, in your view, the potential issues to be addressed with a new provision on hedge accounting?
Well, as always, we need to see both sides of the story. And I think that challenges can be split as follows. First of all, from a general point of view, they will include updating the documentation, potential upgrades of system when needed, education of and/or communication to your stakeholders. Then, depending on your industry activity, you might face complexities in the designation and/or measurement of components and aggregated exposure for those dealing with commodities. Regarding those who are exposed to FX, the use of discounted spot in effectiveness testing and the measurement of currency basis spread might be an issue as well. While for those exposed to interest and commodities as well, under certain scenarios, the sub-LIBOR issue might be of interest. But these are examples of complexities may differ depending on fact and circumstances for sure.
Well, so it is good news, but we still have work ahead of us. So in terms of preparation for the change now, what would you recommend to the ATEL Treasurer members?
This is, of course, a good question, François. As you said, there might be a lot of work ahead, and talking with treasurers and CFO, I can say that only a few of them have the adequate time to deal with that, so ask for help. Now, to answer to your question, I might say, first clarify, what is your current hedging strategy, how is it accounted for, and what would be your ideal scenario for tomorrow? Then, between today and tomorrow, identify where IFRS 9 can ease and where it will be part of the challenge. From a very pragmatic point of view, designate your hedging relationships now and update your documentation on both IAS 39 and IFRS 9 to avoid for sure transition issues. And maybe another tips is keep in mind that IFRS 9 is not only good news about hedging, but is also a new way to present and measure financial assets and financial liabilities. And don't forget the forthcoming expected loss model for the impairment of financial assets for sure.
Well, this is true. Thanks for that. Do you think it could help to save money in the future, to enhance the hedging strategy and to push companies to revisit risk management policies?
Well, yes, but under condition. As always, it will depend on how companies react to IFRS 9. If you just wait for the last moment and then deal with questions from shareholders and auditors, the only thing I'm sure you will increase is the cost of your financial reporting. Now, if you take the opportunity to properly revisit your risk management and hedging strategies, you might end up better protecting your margin, for instance.
Thank you, Philippe. So I guess we will be speaking soon with you and your team about these issues. Thanks for watching us and see you soon.